How's it going tonight, guys? Sunday night. Yes, I may had a little bit of a breakdown. I'm working on it. I went out and I prayed. I did a little bit of yoga. I went out and bought me a mattress, which, man, they're expensive. We It was crazy on how much we actually spent on it, but we got one of those beds in a box, so we're still, we keep it kind of frugal, but we needed a new mattress, and so we got the adjustable one too. Lady was a great salesperson, I guess. But so I was thinking, and I was like, you know what? Where do I go from here with my portfolio? So it seems like we're in this time. I haven't really experienced it. Of course, I lived, through the 2008, crash, recession, housing crash. I didn't really do anything with stocks or anything. So I never really experienced it. But what I'm kind of starting to realize is all money's kind of getting pulled out, and they're just kind of waiting until the Fed stops hiking rates, and then I think, they'll put money back into these companies. So you just kind of got to pick companies that you feel will make it, through all this, which could take a couple of years. So there's really no reason to get bent out of shape over going down. I mean, Meta did drop like 35% in all fairness. So, and I also said, in my Tesla video that you should always be looking to evaluate your portfolio if you're picking individual stocks, which is definitely not suggested unless you just love this stuff. So I do it because I just love looking into companies and doing it myself. I've sat down with Edward Jones before, and and I've talked to financial advisors. Speaking of, you remember my first video when I said they were buying cold, and I was like, I don't know why they're still buying gas and stuff. It was probably not a good idea. Since that video, I saw it at like $42, and it was at $10. So that 4x'd. So there's definitely ways to be making money in the market right now. But the question is do you really understand the options, the shorting, a lot of these movements happen, outside of regular trading hours. So, if you're willing to go through all that and be watching the market even through the night, because it could drop like a rock through the night if you're buying, oils, gas, unless you can just get it at a really good price and kind of hold on to it and then dump it around this time, because it's just not something that you can long-term hold. And that's actually what I like to do. However, sometimes you have to evaluate your positions, and when in my opinion, the best stock in the market falls 35%, you got to do something. Just like I said in the Tesla video, sometimes you just got to move things around, and that's exactly what I did with my portfolio. I still own 5 stocks, and they're still relatively the same. I just got out of Disney. I know Disney has earnings coming up sometime soon, but it could be argued if I even bought that at fair value, I could see it being an $85, $90 stock, and I see where Meta has the potential, to be a $400 or $500 stock, in my opinion. So that's why you kind of got to always look to move things around, or if something like crazy happens, like let's say something were to happen to Mark, then I'm probably going to lighten up my position or not continue to buy so heavily. So I'll go ahead and show you my portfolio. Let's see. Yeah, that's pretty hard to read. But anyway, I'll just tell them to you. I'll eventually put it on the screen and all that. I'm just kind of waiting for a camera to come. But so I own Meta. I own about 5.5 shares of Meta. So my average cost on Meta is 93 even. I'm down 2%, 2.5%. So I'm down. Yeah, I'm only down 2% on that. So, and I will continue to add Meta below $93. And actually, I'll probably continue to add Meta the rest of this year and probably into next year. There is another stock I'm thinking about adding to this, but we'll talk about that in a minute here. But yeah, that's definitely my heaviest weight. I would say that's probably maybe about 50% of my portfolio. Nah, about 40. But I also own Win. And Win, we've done very well on Win. So my total return on Win is $28, or sorry about that, 28%. More like $60. So, but 28, almost 30% up in a couple of weeks. That's pretty good, And Win is also a company that I'll continue to add. A lot of it is heavily dependent on China. When China starts to open back up and actually be serious and for real, I don't know what they're doing there, but that's on them. But when I can continue to add into the lower 60s and definitely heavier in the 50s. My buy point on it was 54.83, and right now we're sitting at $70.60. So Win is definitely killing it. My next position is Allegiant. And Allegiant's been killing it as well. I will continue to add to Allegiant if we ever bounce down below around $66, even $67. I'm a buyer of Allegiant. I like what they do. Like I said, they're more of an airline. They have a motivated CEO. And this should honestly, in my opinion, be about a $200 stock. But so far, we're up 10% in Allegiant. So, yeah, my average cost is $66.90. That's probably why I bought it and why I bought it so quickly, because you never really see it at those levels. So, and I'm definitely happy to add, and I would be willing to probably triple my position in Allegiant or Win, in all of these. These are all great companies. My next one up is actually Square, or it's notably Block, but only up 7.5% in Square. I'm okay with it, and I would continue to add under $55. I should have probably bought at $55, but I bought at $55.86. Again, I kind of want a play like this in my portfolio, so I'll be looking to add to Square as well, but right now my number one focus is Facebook. Now, I own a lot of Facebook also in my private account, but from here on out, I'll try to be buying in the public account, which I will have it so you guys can actually see it clearly. I don't like doing the phone thing. It's not working very well. And then my last position, which is probably my most, I would say, skeptical, I guess, if that's the right word for it, just because more of what I see than more what the financials see. The financials, it is a money-losing company, but that's Chargepoint. I just needed really an energy play, and Enphase was too expensive. That would have probably been my second pick. But right now we're actually down 3% on Chargepoint. I bought it at $12.69 and we're at $12.64. Now in my opinion that's great, because the thing with Chargepoint is Chargepoint could potentially blow up. Like, I could see Chargepoint, if it goes, everything continues to go well, they continue to maintain most of the charging stations and like at the airports, and they kind of have the infrastructure of the charging networks, like 70% of them. But Tesla's probably eaten a little bit of that away since I've actually checked. But I think Chargepoint has the potential to be huge. Or I still honestly think it's probably a $30 to $50 stock in a few years, and I could honestly see it run into 100, 150. I know that sounds crazy, but it depends on how well the EV thing takes off, and even after, and like I said, you got to look at the competitors, and I've looked at Blink. Chargepoint just owns more. They're just more in charge of the charging networks. So, and they sell a lot of charging networks too. Eventually, when they become profitable, I believe it will fly when EVs fly. So this is kind of like more of a energy hedge more than anything. I also talked about Sunrun in my first video, and they did amazing on earnings, and I think that stock's actually still running, but it's a little bit too much for me, and I love the fact that I believe Sunrun has like 90% institutional ownership, which I love seeing institutional ownership. When you see that, that means you're not the only one that thinks this way. So I do like looking at that. And that brings me to my next company that I'm really thinking about getting into, and that's Palantir. They have earnings tomorrow. I'll definitely be paying attention. I will probably make a separate video on just Palantir, because that's how special I believe this company will be. But yeah, so far I have, I said... So anyway, how I said I was starting with the 1K challenge, right? But I told you guys I was going to add. And I'm serious, So right now we're sitting at about about 1,400. So I doubled my position. So what I've done is I doubled my position in Meta, and actually a little more than double my position. I probably actually... almost like one and a quarter, so 125% I added to Meta, because their earnings was crazy. So with me doing that, I cut Disney out of the picture, so Disney's gone. But it was one of my least victed stocks that I had on my list, So I had the least conviction in it. I said convicted, Jesus Christ, but no. Square, I still will probably add to Square, but Meta under $100 is just like, I can't help myself. And I also thought a little bit about SoFi, but I'm fine with Square in the fintech world. And if that's what you want to, well, yeah, actually you want to call SoFi that. But yeah, so that's how my portfolio is going so far, guys. I'll see you on the next one. Please like and subscribe. Thanks a lot.